Hello students, this is Durga Prasad Nalla, accountancy teacher. Today our topic is chapter number 6 of class 11 accountancy, rules of debit and credit. I repeat, rules of debit and credit. Here mainly when we are doing rules of debit and credit, we are going to learn about how many approaches are available for recording of transactions. There are two approaches called traditional and modern. Traditional approach is also called as golden rules of accounting. Under golden rules of accounting, the business transactions categorized under three: personal account, real account, and nominal account. Children, personal account deals about individuals and artificial persons. Individual means Rama account, Krishna account, Madhu account, John account, Samir account, like that individually. Where artificial accounts means State Bank of India, ITC Limited, Madhukan Enterprises, like retail outlet name. Those are comes under personal account. According to the personal account, what can be debit, what can be credit? Earlier we have discussed debit means receiving aspect, credit means giving aspect. Now in depth, if you are entering into the subject, if a transaction comes under personal account, now the transaction segregate into two aspects. One aspect must be debit, another aspect must be credit. Which aspect we should debit, which aspect we should credit, this golden rules will tell us. If one of the aspect comes under personal account, means an individual, make sure that individual is receiver or giver to us. Don't forget, the other party who are dealing with us is the receiver to us or giver to us. We should think our point of view. Our point of view is business point of view. The other party is the receiver or giver. If the other party is a receiver, we can debit the transaction. We can debit him. If the other party is the giver, we can credit him. Similarly, the other rule of accounting is real account. It is also called asset account. When we are purchasing asset, we may receive asset. We may receive cash. We may receive bank balance. In such cases, we write debit. Means the rule is debit what comes in and credit what goes out. And next golden rule of accounting is nominal account. As already you know that income and expenses means the transactions which are in recurring nature, we can say income and expenses. Under this account rule, all expenses and losses are supposed to be debit. All incomes and gains are supposed to be credit. So this whole rules of accounting are considered as golden rule of accounting. Hope you understand. Now we are going to learn about another approach, which is modern approach. Under modern approach, there are 5 categories: asset approach, liability, equity, revenue, expense. If your asset is increases, for example, you purchase an asset, machinery. So machinery is going to increase, which means debit. Asset decreases, you sold an asset value get decreases, which means we need to credit. Similarly, liability decrease, debit. Equity means capital. Equity means capital. Revenue means income. Expenses, as we know, a recurring nature. So asset increases, debit. Asset decreases, credit. Liability decreases, debit. Liability increases, credit. Equity or capital decreases, debit. Increases, credit. Revenue decreases, debit. Increases, credit. Expenses increases, debit, and decreases, credit. If you observe over here, assets and expenses are similar in transactions. Effect: liability, capital, revenue. These are similar effects. So when we are writing transactions journal entries, we can follow either of one approach. You can follow golden rule of approach or you can follow modern approach. Which one you feel comfortable, you can follow that method. Okay, let us see one example. Here we have a business transaction. These are all called business transactions. A normal business have multiple transactions. We have taken few examples. From the following transactions, state the nature of account and state which account will be debited and which account will be credited. Children, here we are today. This problem we are doing under golden rule of accounting. Means traditional approach. Pawan started business investing capital in cash 2 lakhs. Purchased goods for cash 1 lakh. Sold goods for cash 1,50,000. Received interest from Ram in cash 500. Sold goods to Ashok 60,000. Purchased furniture for cash 50,000. Paid wages 20,000. These are all business transactions. How we are going to segregate this into debit and credit? To know that, we need to identify the what is the nature of account. To understand this concept in better way, we can solve the question. Here I am going to solve the question. Check. Children, here is the solution. Whenever these transactions we are showing in a to identify the accounts involved, nature of account, debit, credit and reason. This is the format you follow. Analysis of transaction under golden rule of accounting. You can keep the heading this. Golden rule of accounting. So Pawan started business with cash 2 lakhs. 2 lakhs. What are the various accounts? Whenever transaction is there, we must divide into two aspects. What are the two aspects involved here? You can cross check. The two aspects are, one is cash and the Pawan is capital. And the nature of account, cash is an asset account. Cash is in real account because cash is an asset. Capital brought by the owner, that's why it comes under personal account. So now what should I debit, what should I credit? This we come to know. You just check the business receives cash, that's why it comes in. And the owner is the giver to the business. So as you know that comes means debit, the amount we are showing on the debit. Giver means credit. Giver means credit. And purchase of goods for cash. Cash is the one component. Purchase is the one component. You can check two aspects here. One is purchase, another one is cash. The nature of account is purchase is nominal. Why purchase is nominal? Because the purchase is a transaction, is an expenditure to the business which is recurring nature. Which is in recurring nature. That's why always purchase is nominal account. Where cash is an asset, that's why it comes under real account. In this case, purchase is an expenses. That's why we are debiting. And cash is going out. That's why we are crediting. Check. Sold goods for cash 1,50,000. The transactions includes cash and sales. One is cash, the other one is sales. The nature of accounts are cash always real, sales is a nominal. Why? Because it's a regular income. In a year, multiple times it will take. So recurring nature. That's why we can put under nominal account. Cash is comes or goes when goods are selling. The cash we receive. That's why comes. So which is debit. And according to the golden rule of account, all incomes are credit. That's why the sales is an income. So we credited. You can cross check here. Cash I am showing in the debit column. Sales I am showing in the credit column. Just check. Observe the transactions where I am showing here. In the debit column and credit column I am showing. Received interest from Ram in cash. We should ignore the name of the Ram. Why? Because received interest is an income. Here. Ram given to us. So that received interest is an income. Cash and interest. People may get confused. Ram they will take into consideration. So don't get, because the received interest is a regular income, means recurring nature. That's why we should ignore Ram. So cash comes and interest is an income to us because we received. That's why in income. Income always credit, comes always debit. Next, sold goods to Ashok. Whenever they have mentioned name Ashok, don't consider it as a cash transaction, consider it as a credit transaction. So now the two parties involved here, cash and sales, two aspects. Ashok is an individual, that's why he will be shown under personal. Sales is nominal as usual. Personal. When we selling goods to Ashok, he is the receiver of goods. He is the receiver of goods. That's why receiver always debit. Income will be credit. Purchase furniture for cash will be divided into two accounts, furniture and cash. Both are comes under real account. both are comes under real account, both are assets. So furniture is coming, cash is going. Very clear. The comes will be debited, the goes will be credited. Paid wages here. Paid is the past tense word they've used. That means paid means cash we paid. Indirectly, cash we paid. Wages is a recurring nature, so it's an expense. So the two accounts involved is one is wages, another one is cash. Wages is an expense, cash is a real account. Wages comes under nominal account, cash comes under real account. You can cross check here expenses and goes out. So expenses always debit, goes out means credit. Once again check total question. So this is the procedure we follow to identify the accounts involved and the nature of accounts based on the reason which item will be debit, which item will be credit. So here